The stats for the lower end of the market for June are showing some interesting trends, especially in the main indicators and sales to list price ratio. Hi, this is John James from the James team at RE/MAX Partners, and we are moving right into our price segments, beginning with the lower end of the market for the month of June. So this is from 250,000 to 750,000. And like I said, the main indicators are certainly telling. So let's start with those. Median sales price only increased by 4.3% over last year, going from 431,500 to 450,000. The number of sales grew from 476 homes in June of last year to 709. That's an uptick of 49%. And the total dollar volume for June sits at $333,260,514. That's 53% from the little over $218 million we saw last year. Well, these numbers for units sold in volume are way up from last year, relatively flat from last month. Same with median sales price. So does this mean we're at the end of our run on real estate? I don't think so. It's more likely the COVID spike in the market has finished and we're going back to a normal seller's market, whatever that happens to be. Just happens to be higher than where we were, but the gains are more predictable. Inventory is a good indicator of this. Days on market dropped to 9 from 35 last year, and that's a 74% decrease. And there is now only 1.3 months of supply left for this price range. Compare that to the 4.1 months we saw last June, and that's a change downward of 68%. And how many listings are currently on the market? That's 65. That's off 63% from the 175 active listings we saw a year ago. But as I've been saying for a while, it's not that we don't have new listings coming on the market. They're just not staying on for very long. We saw 10% more new listings this June at 613 than last June's 556. Here's the most telling statistic for this price segment: sales to list price ratio. How much a home sells for compared to what it's listed at. This has now reached 100%. So this is the top of the bell curve. So now the homes going over a list is equal to the number of homes which were negotiated downward. And I don't remember seeing that in any of the time I've been a realtor so far. Price per square foot is showing it is costing 13% more for less space. Now sitting at $385 for June, where it was $341 last year. And to round out the value category, price reductions took a tumble, no surprise, dropping by 69% from 42 to 13. Finally, pending listings are way up. There are 683 homes under contract, which is 45% over where it was last year with 470 pendings. Again, this is most likely due to the longer contract times. And with the number of sales still way higher than last year and with only so many appraisers and inspectors in town, that's not likely to change anytime soon. So we'll keep moving on with our price segments. Next will be the middle of the market. That's 750 to 2 million. And I'll have the next episode of The Contract up soon covering association documents. What do you think of these updates? I would love to know what you think. So call or text me at 970-846-0797. Email me at johnjames@jamesteamsteamboat.com or leave a comment in the video. And if you liked it, leave a like. Thanks very much and take care.